Joining me now to discuss at Post 9 is venture capitalist Rashaun WIlliams. He is Harbinger Sports Partners founder. He is also an investor in SpaceX and Anthropic, as well as in a variety of sports assets and lots of other stuff. Rashaun, good to see you.
Good to see you. Thanks for having me.
I mean, I guess the big question is just how big the appetite for the public is going to be to capitalize these companies at what they're now contemplating.
10 years ago, when liquidity started to dry up a little bit, the secondary market started to really build in tech. There are trillions of dollars of pent-up demand for these big tech companies, and most people are kind of going right into the private markets to get it. When these companies go public, there will be an insatiable appetite for these companies because it's already leaked into the private markets.
It has, although I guess that's the question. I mean, is there a risk at some point of one of these companies kind of waiting too long and you've exhausted the demand because so many people had access in the private markets?
If you can go somewhere else and find a company that goes from $1 billion to $5 billion in revenue in 9 months, go find it. But for now...
And that's Anthropic?
It's Anthropic. Companies like SpaceX, Anthropic, OpenAI, even the newcomers like Sierra AI, these guys are crushing it, and they're doing annual reoccurring revenue, and some of them are growing at 500% every 6 months.
I guess the question is how big the pie ultimately is, because you see the public stocks, they're kind of give and take, right?
Yeah.
There's somebody's in, somebody's out. We're not really sure it's going to be all winners.
Yeah.
So where does that leave you thinking about like an Anthropic? Although Anthropic seems like right now is that they've kind of, got the ball.
I think we're at this inflection point right now. I feel like every time I come here to talk about IPOs, it's some really big IPO that some people are questioning. I was here to talk about Coinbase before I went public. Robinhood, Dropbox, Lyft, Airbnb, DraftKings. It's the same theme. 5 years ago, it was about software. Right now, it's all about AI. 3 years ago, it was about cybersecurity. 2 years from now, it's going to be about quantum computing.
You think quantum is going to be ready?
I think quantum is on its way. That's the next thing.
How should we think about the business of SpaceX at this point? It's kind of a threat to some of the telcos. So there is that piece of the business that just looks like, its users, its subscriptions, et cetera. And then there's the going to Mars thing.
I think the business of SpaceX is you're making a bet on Elon Musk. When we first invested years ago, it was probably 10 years ago, we were thinking we were getting a rocket company with government revenues, which is a very safe bet.
Right.
And they still shoot rockets out there. Now 70% of their revenue is internet access. How crazy is that?
Right. Yeah.
So it's a great company. They're changing. They're taking over the world, and they can do whatever they want because Elon just has an open checkbook to do whatever he wants.
Now, you do hear people say that, you got to continue to kind of spend to keep the satellites in the air. Like, in other words, longer term, it's unclear if it quite scales at high return.
Yeah, they have the money to spend.
Yeah.
All the money in the private markets is flowing to AI, is flowing to big tech. Look at the money the top 20 VCs raised last year alone. Probably 90% of all the money that was raised in the private markets. It's going to Series D, E, and F late-stage tech companies. Sovereign wealth funds, mutual funds, retail investors. Money is not a problem.
Okay, we'll see if that remains the case. Do you want to talk a bit about the sports market right now? Because it feels as if that's one where big public pools of money have also been directed at what used to be, these kind of one-off bespoke assets like a sports team. So where is this headed?
Similar theme.
Yeah.
So the thing that makes tech really popular right now is annual reoccurring revenue and high growth rates. The thing that makes sports popular right now, same two things. Annual reoccurring revenue from media contracts, the Disneys, the Amazon, Netflix of the world. Except their annual reoccurring revenue isn't growing at 500%, it may be growing at 15 or 20, but it's on 10 to 15-year contracts, where an Anthropic or OpenAI is on a monthly contract with retail investors. Also, they have moats around their business and is non-correlated to the equity market, so it's a little bit of a hedge against the AI trade.
It makes sense, and that's obviously, a pretty good pitch. I guess the question is, do valuations ever take a break?
I remember 10 years ago, I was watching you guys on TV, and people were talking about how the private tech company valuations are too high. What they weren't contemplating was how revenue is the thing that's driving growth. Multiples are flat in sports teams and in tech companies. Actually, OpenAI is trading or SpaceX is like 88 times revenue.
Right.
That's the exception. But in general, you're talking about a 10 times revenue multiple for sports teams, and that's flat. Revenue has tripled for the Atlanta Braves. They're a publicly traded company. $250 million in revenue 10 years ago, $650 million in revenue now.